Good morning. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm going to get you what you need to know before you go. That starts out with the economic data, how that impacts the overall markets with some market analysis, maybe sprinkle in some geopolitical fodder to round it all off, and then round it out by talking about some strategies that I'm implementing into my portfolio based on those assumptions. So before you go, like the dogs are going to come in, make sure you smash that like button for me. All right. Economic data. Yesterday, we talked about this late in the day. We were looking for some ISM numbers here in the United States. That's the Institute for Supply Management Purchasing Managers Index. Forward looking. Well, that came out better than expected, or actually in line with expectations there. So really not going to see a whole lot there. Anything above 50, remember, is expansion in the economy. Anything below 50 is contraction. We also got crude oil inventories coming out later on this afternoon. So keep your eyes out for that. Construction PMI out of Great Britain coming in above 50 and better than expected at 59. That's about it for the economic data. What are we looking at on the overall markets? Some weakness here across the board, except for here in crude oil. Get the crude oil. There we go. Let's do that way. Crude oil is moving a little bit higher. Levers and pulleys are working in the economy here. Bonds falling out of bed finally, losing that momentum, continuing to see this market move higher, or interest rates move higher. When you see the price goes down, it's inversely related, folks. Remember, it's like the teeter-totter, all right? So as this price falls, that means interest rates are rising, at least on the long term. We've got Bitcoin coming off, not really an inflationary gauge or anything else at this point in time, but gold futures, something we were watching is this old Fibonacci high. This correlates to the financial crisis high. So that's been acting as a support and resistance for quite some time. I mean, we could go back in time and see how many times we've tested it and failed. But now that we're finally there, we are really toggling around that number and beating it up, to be quite honest. The fact of the matter is, though, when we settle above that line in the sand of 1923.7, that is very bullish, all right? It's still that the bulls are in control. We have tested it a couple of times, but the settlement is what's key here. So if you are looking to trade gold, I would wait for it to make those settlements. VIX starting to make those moves to the upside, and because we're starting to lose some strength here in equities. Now, I've talked about this. Bonds and the NASDAQ are very close to the point of control. E-mini S&Ps are a little bit overextended from that area, meaning that they have more of a correction to get back to that level. Anytime we've traded around that point of control, that means that time and volume has been spent there. Folks have gotten accustomed to seeing those prices traded a lot, so they aren't as interested in jumping into the markets around those levels. That loses participation, whether it's from the bearish side or the bullish side, and we start seeing the markets finally relent to those areas. And we're seeing some weakness here where the bulls are starting to relent here a little bit around this point of control and seeing some weakness now. We've talked about this 50-day simple moving average before, folks. It is going to act as a support and resistance today. NASDAQ, again, was at the point of control. It's got another point of control down here that isn't that far, not that much smaller, shouldn't be that much more of a lift for people to really expect that to start trading again. So I think that we could see that happen. Again, look for the 50-day simple moving average to find that support for this level. It lines up with that low area in the volume node there. And here's what I was talking about with the E-mini S&Ps. They have more of a correction here because the point of control is much lower there. We talked about this with the levers and pulleys of the markets, that the E-mini S&Ps was going to be a place where E-mini S&Ps and the Dow was going to be a place where folks were going to be finding some areas where they would perceive value, I guess, more so than we would in the NASDAQ. So NASDAQ had that correction. Now, E-mini S&P is retaining value, but I think we're going to see this weakness across the board here. So as an assessment, I would say equities risk is the downside, more so in the E-mini S&Ps than NASDAQ, let's say, and then risk is to the upside. Gold downside in bonds. Right now, a little bit bag on the crude oil. We're going to have to keep our eyes out for this inventory number to really get us a directional move here in crude oil. All right, so before you go, make sure you smash that like button, comment if you have any questions, comments, or anything else, and don't forget to subscribe because I'm unannounced in the morning. And if you want to catch these announcements or when I'm talking, make sure you hit the little bell. All right, if you can't take that, take it easy.